Bitcoin just bounced hard. But the real question is this a real recovery or just a dead cat bounce? This week, Bitcoin rebounded sharply after President Donald Trump announced a framework deal involving Greenland and the Arctic region, which also included canceling new tariffs scheduled for February 1st. Markets reacted instantly. Crypto pumped. Risk assets breathed again. But as long-term Bitcoin investors, we don't chase price. We analyze cause and consequence. In today's video, we'll break down why Bitcoin rebounded, what Trump's Greenland deal really means, the role of the taco trade, Trump always chickens out, historical comparisons with the 2025 tariff wars, whether this is a dead cat bounce or the start of something bigger, and what long-term Bitcoin holders should do next. This is Bitcoin Legacy. Calm, factual education, not hype. On Wednesday, the crypto market reversed sharply after days of selling pressure. Bitcoin bounced from recent lows. Altcoins followed. Total crypto market cap stabilized. But the trigger wasn't technical, it was macro-political. President Trump announced a framework deal with respect to Greenland and the broader Arctic region, stating, "Based upon this understanding, I will not be imposing the tariffs that were scheduled to go into effect on February 1st. That single sentence mattered more than any chart pattern. Why? Because markets were pricing in trade escalation, higher inflation, slower global growth, stronger dollar pressure. When tariffs were paused, risk appetite returned. Bitcoin didn't rally because it's suddenly digital gold again. It rallied because fear was temporarily removed. At first glance, Greenland sounds symbolic, but geopolitically it's massive. Greenland sits at the center of Arctic shipping routes, rare earth mineral access, military positioning for NATO energy and climate strategy. Trump framing this as a solution for the entire Arctic region signals de-escalation, not confrontation. Markets hate uncertainty. This announcement reduced uncertainty. And when uncertainty falls, stocks rise, crypto rises, volatility compresses Bitcoin despite its long-term independence narrative, still trades short-term like a risk asset. That's the uncomfortable truth many don't want to admit. This rally wasn't just about Greenland. It was about TACO. TACO stands for Trump Always Chickens. Outtraders noticed a pattern. Trump threatens tariffs. Markets panic. Trump delays, modifies, or cancels. Markets rebound. We saw this repeatedly during the 2025 tariff wars. Bitcoin reacted the same way back then. Sharp drops on headlines, violent relief rallies after reversals. This creates a tradable narrative, but also a dangerous one. Because markets stop pricing policy, they price Trump's reaction to market pain. That's what happened here. Bitcoin bounced not on fundamentals, but on policy retreat expectations. A dead cat bounce is a temporary rebound. Inside a larger downtrend fueled by short covering and sentiment shifts. It feels bullish, it looks bullish, but it fades. So how do we know if this is one? Let's look at key signs. No major on-chain accumulation surge, no breakout above long-term resistance, no fundamental Bitcoin adoption catalyst, rally driven by political headlines, not capital inflows. That doesn't mean Bitcoin must fall again. It means this rally is fragile. Dead cat bounces are common in macro-driven markets. And Bitcoin, whether we like it or not, is now part of that system. In 2025, we saw similar setups. Tariff threats, risk-off moves, Bitcoin sell-offs, sudden reversals. Each time, Bitcoin bounced hard, but the real trend didn't change until liquidity returned, rates stabilized, dollar weakened sustainably. Short-term relief rallies came and went. Long-term trend changes took months, not days. This Greenland-driven bounce looks structurally similar. Relief not equal resolution. If you're a Bitcoin legacy investor, this is not a trading moment. This is an observation moment. Here's the calm approach. Ignore political noise. Watch liquidity, not headlines. Track long-term support zones. Accumulate slowly, not emotionally. Avoid leverage during headline-driven volatility. Bitcoin doesn't win because of Trump. Bitcoin wins because fiat systems repeat the same mistakes. Short-term politics may move price. Long-term math decides the outcome. So, dead cat bounce or new bull cycle. Right now, it's a relief rally driven by policy retreat, not structural change. That doesn't make it useless, it makes it informative. It tells us markets are fragile. Bitcoin is still macro-sensitive, volatility is here to stay, and that's exactly why Bitcoin exists. If you're here for hype, you'll get shaken out. If you're here for legacy, you stay patient.